Let's bring in Kevin Green, senior markets correspondent here on Schwab Network to help set up the action today. All right, KG, let's talk about this streak that we've seen on the S&P 500. 9 days in a row, biggest winning streak in, what is it, more than 20 years now. Does this momentum have staying power, and what indicators are you watching for that?
Yeah, I think the whole market, everybody in the market's really trying to figure that out. What is the staying power here? I mean, this is an unusual rally that we have seen over the last 9 days. And as you talked about, this is the biggest rally that we've seen, or a consecutive rally when it comes to days in 21 years. And you could look at maybe a small, potential pullback just because of some profit taking. We do have some areas of resistance when you're looking around that 5,700 level. A lot of options positioning also sitting there as well. And this week, we do have some economic data as well as the Fed that could really drive prices. And I think the Fed is probably the biggest vol event that we have on the calendar this week, just given the fact that soft data is showing that we have some weakness. Sentiment is starting to come in when it comes to not only just the consumer, but also purchasing managers. But the hard data has not really reflected any type of material weakness as of yet, at least enough for the Fed to try to cut, at least for this meeting here. But what will be interesting, though, Diane, something to kind of keep your eye on, do we get any type of signal from the Fed around quantitative easing? Do they actually start the slowing of the mortgage-backed security runoff on their balance sheet, which is still fairly robust right now? And there's a small portion of Treasury securities that they are still rolling off. But if they stop that process, that might be the first signal that the Fed is willing to take some actions in order to backstop the market here. And that could give equity bulls a little bit more confidence that this rally has some staying power here. But once again, we just have to be very cautious. It's nice price action that we're seeing to the upside. If you're looking at the S&P composite total volume, we are seeing volume actually expand. You are seeing breadth in the market here, but you are seeing some significant divergences that I think a lot of individuals, traders, investors need to be on the radar here. Credit default swaps are still rising to the upside here. High yield credit spreads still rising to the upside. So there's a lot that's still disjointed with this market. So cautiously optimistic. We break above that 5,700 level, then you're really talking about potentially trying to reach new all-time highs here. I'm just not sure if the market really has it in order to do so, given the fact that we may not see the economic effects of tariff policy for another 2 to 3 months.
Yeah, that's a good question, because obviously the jobs report on Friday came in much better than expected. But the view is, especially when you talk to or hear from different economists, is that we may not see that disruption until May with regard to the economic data. But at the same time, if we get some deals on the trade front, it could kind of, put a stop to some of the issues that we expect to see, or disruption that we expect to see in some of the hard data. So you mentioned, obviously, that we're paying attention to the Fed this week. Besides that, when you think about the latest on the trade front, do you think that's really going to be, kind of one of the market focus this week?
Of course. I mean, obviously, it's been a really big factor over the last couple of weeks here. It's just any type of optimism when it comes to these trade wars, especially when you're looking at China. Now, there is some discussions that China and the U.S. are having talks right now, but we did see some commentary coming from President Trump over the weekend that he does not have any, meetings or intentions to speak with Xi, at least for this week. But could we see some trade deals? The president is kind of hinting towards that. Either this week or next week, we could see some announcements. Now, I think the market's already probably pricing in that India is going to be one of those bigger announcements that we will see, which actually is a formidable one because they do have some protectionist policies that are already in place. So India could be on the radar, as well as Vietnam. So those consumer discretionary stocks, especially if you're looking at like a Nike that actually has a lot of concentration when it comes to production within Vietnam, could be beneficiaries of that. But I think the market's really focusing on the EU, China, and Japan. And Japan has actually been very interesting when it comes to its rhetoric, Diane. It doesn't seem like they're actually easing up anytime soon. They actually did make a mention last week that the U.S. treasuries that they have on their balance sheet could be a tool that they could use. I'm paraphrasing, but it could be a tool. It's not saying that they are going to start selling their treasuries in order to make a statement, but they did put that on the radar. So the trade deals definitely will be a driver, but a lot of this move to the upside might be pricing, some of these easier or lower hanging fruit type of deals already might be priced in here. And then what do those deals actually look like? Are they formalized deals that have to get approved by Congress, or are these going to be really trade intentions or memoranda in the market here? Or basically what we kind of saw in the first Trump administration, where they're non-binding agreements, but maybe it's enough to give them an out to be able to lower tariffs.
Okay, and then I want to get your thoughts on the price action that we're seeing. Crude oil. Crude oil under some pressure this morning. It looks like it's off the back of this news that OPEC Plus increasing production. Why don't you recap what's going on here, KG?
Yeah, I mean, you are seeing a recovery. Crude oil was down about 4.1% in early trading yesterday. So there's a couple of factors. Obviously, we see crude oil moving to the downside because of potential economic slowing on a global scale. And then you also have OPEC that continues to increase their production targets. They did have a meeting over the weekend, OPEC Plus, and they are going to increase production, at least on paper, in June. Now, there's two schools of thought here to kind of keep in mind. One, the increasing of production, given the fact that crude oil prices are moving lower, is kind of counterintuitive. Maybe there's some geopolitical risk that's being priced in there if we do see some disruptions in the Middle East, especially when you're looking at Iran. But the other side of that is some of these OPEC players, especially when you're looking at Kazakhstan as well as Iran, have been Iraq, I'm sorry, have been overproducing for the last year and a half, almost 2 years. And so OPEC Plus is also potentially increasing production in order to try to put them in check, if you will, and saying, hey, if you're going to overproduce, then we're all going to overproduce in a sense, which would eat into some of their market share. So there's two dynamics that are really taking place right now, but you don't really want to see oil below $60. It might be decent for consumers at the fuel tank, but historically, once you start seeing a break of major and key areas and levels, especially break-even points for a lot of domestic producers here, that could have a monumental impact when it comes to not only the labor market here in the United States, but also industrial demand. And that's something to keep on the radar. And if we have oil prices go too low, Diane, yep, that's going to be good for inflation. But what happens when we have economic growth happening? You also see a massive re-rating when it comes to oil. And that is something the Fed's probably keeping on their radar when it comes to their inflation targets and their monetary policy.
Great points, KG. And really quickly, you mentioned 5,700 resistance level. What are you watching for on the downside?
Yeah, for the downside here today, 5540 is where I'm seeing flows right now. It's still fairly wide because we have an elevated VIX sitting at around 25 or so. So we have some levels before we get to that 5540-ish area, but that's going to be the major area of support for today.
All right, that's Kevin Green, Senior Markets Correspondent here on Schwab Network. Appreciate you, KG.